What's up, guys? Jay Martin here, investor and CEO of Cambridge House. And my guest today is Chen Lin, the president of Chen Lin Asset Management and the author of the newsletter, What is Chen Buying? What is Chen Selling? You can find him at chenlin.com. So his forte is precious metals. We talked a lot about that, obviously. He walked me through why he exited precious metal equities in November of 2020, where he put that cash and where he's putting it now. We walked through his forecast for gold, silver, zinc, copper, a handful of commodities. We walked through China's manipulation of our inflation numbers, a bunch of interesting stuff that was kind of off my radar. And of course, when somebody comes to me with a bullish thesis, in this case on precious metals, I got him to share his stock tips. Let me know where he's got cash so we know he's got skin in the game. Now, 3 things before you watch this interview. Number 1, right below my head, there's a pinned comment with a link to an event that I'm producing in Vancouver, Canada on January 16th, the Vancouver Resource Investment Conference. This is about 230 junior mining companies, about 100 keynote speakers flown in from all over the world, including some headliners like the former Prime Minister of Canada, Stephen Harper, the former President of Mexico, Felipe Calderon, author of Rich Dad, Poor Dad, Robert Kiyosaki, and honestly, dozens and dozens more. This conference is going to be a beast. The pinned comment's right beneath this video. Check it out. Love to have you there. Number 2, all the ad revenue from this channel now gets donated to an organization super close to my heart called Zero Ceiling. Zero Ceiling's mission is to end youth homelessness. The way they do this is by giving at-risk youth in urban centers the opportunity to relocate to beautiful wilderness environments. I love what they do. And number 3, if you prefer to listen to my content as opposed to watch it, you can now find me wherever you listen to your podcast. Just search for The Jay Martin Show. Here's Chen Lin. Enjoy. I assemble the smartest people I can think of or reach out to carry that conversation, and that's exactly what I've done today. Please give my panel a round of applause. Welcome. All right, I'm here with Chen Lin. Chen, how you doing?
Good. How are you, Jay?
I'm very good. Very good. It's great to meet you and have you on the show finally.
Oh, thank you. Yeah, it's a pleasure.
So for anybody who's not familiar with who you are and what you do, could we start, Chen, with a high-level overview of how you spend your time?
Yeah, I mostly focus on manage my family portfolio and have a pretty extensive portfolio through for my parents and myself and my extended family. Okay, so that's most of my energy. I also write a newsletter on the side. Okay, so it's called What's Chen Buying? What's Chen Selling? A lot of the audience are hedge fund and very wealthy individuals. So I gave them some idea what I'm thinking, the direction of the market, and what I'm doing. And I try to stay liquid in my newsletter because I'm also a pretty sizable investor. But also we also touch some juniors if there's very good opportunity.
Okay. Now, I'd love to start then on the macro fronts. What threads, what themes, what events, Chen, are you paying the most attention to right now?
Right. I love gold and silver. So it's one of my saying. And last November, about this time, I got out of gold and silver when Pfizer vaccine came out. Most of the gold, silver, the liquid ETF, the future, but not junior because they have their own, mechanism to run. So because when I saw the Pfizer vaccine came out and it's really run for the dash, and I run for the trash. What they call, you buy whatever cruise liner, movie theater, retail, energy, anything make money, right? So I run that for a few months. I got out of them, and just recently, about a month ago, I got back to gold and silver. The majors and the ETFs. I think because I had a presentation a few days ago. So if you compare now versus 2013, which is another taper year, right? This year it's a tapering year. 2013 was a tapering. The tapering announcement was the bottom of the gold, and actually it happened again. Okay, so what I see, and there's so much pessimism of gold. I saw all these funds. We are constantly talking to different funds. Hedge fund there want to short gold, they want to smash gold down, they want to go to 1,500. And the gold just couldn't go down. It went down initially on the tapering announcement, immediately bounced back. In the past few days has been amazing. Dollar has been very strong. that's where, the fund got it right. After tapering announcement, dollar will be strong, but gold is stronger. So we have a very interesting situation. Plus, we have a year-end traditional rally, right, for gold and silver. Even in the bear market, you can make money during the year-end rally, right? Year-end rally usually start around November, December timeframe, and then they usually finish around Chinese New Year, because Chinese New Year is the big physical event, because I'm not Chinese, right? But I'm talking about people, particularly in China, they like to buy gold for the Chinese New Year. So there's a lot of physical demand. So I feel from now to the Chinese New Year, we probably have a very good chance to squeeze the short harder.
Interesting. Okay, so that gives me some perspective on your time horizon, right? So you exited gold and silver equities in November 2020, moved into like the comeback industries, right? Cruise ships, travel, right? Industries that were quiet.
Yeah, also energy also a part of my keyboard.
Okay.
Yeah.
And now you're back looking at the precious metal equities because, generally speaking, the market's been massively hit, right? It's been very quiet. So what is your typical time horizon and hold time of your positions, Chen?
I can be as patient as possible. I mean, there's some, if I see a good value, I can stay that for years. But that vaccine news a year ago at the Pfizer, initially, if you remember, was 90%. Then immediately people, I feel like they will be rushed for those trash, right, at the end of the year. So we take a ride, right? We take a ride, make more money, and then we come back, buy more gold. I always like gold and silver. And, but you have to be tactically sidestep a potential weakness, right? That's the thing. So I'm not those typical buy and hold forever guy, but if there's opportunity, I can trade it around. I see gold go down. I'm not hesitate to sell it with the hope to buy back lower price.
Right. What attracts you to the precious metal sector, Chen?
Well, it's part of the tradition. In Chinese has traditionally been silver standard for thousands of years. Okay, if you read at a bank, BANK in Chinese, that means the place to store silver. Okay, it's really about that. I mean, so gold standard, silver standard has been for thousands of years. And in the history, if you look back the Chinese history, there are periods of time that people try to get out of the silver standard. They won't last long, usually last 100 years and 200 years, and then hyperinflation, boom, have to go back to silver, because what happened was all these people in power who has the power to print money, they will print unlimited. There's just no way for them to turning back. Okay, we are also at a tipping point right now, very close, because United States, the debt to GDP is going through this direction, and then we'll keep on printing. And think about that. Next year, the Social Security is going to increase by 6%. So the deficit is going to be even further, right? So we're getting close to the tipping point. But initially, I saw the gold run to 2000 something was a little bit overshoot. If you see the debt to GDP, then let it come back, and then we can get back in at a lower price. So that's typically I'm thinking, because I'm also manage my family's future account, ETF account. Those are very sensitive to gold movement.
Hey, that's interesting. I feel very ignorant right now. I didn't know China was on a silver standard. Can you elaborate on that a little bit for me, Chen? Specifically, to what extent? And secondly, you mentioned BANK is translated to, correct me if I botched this, a place to store silver. Did I understand that correctly?
Yeah, exactly. The bank means the place to store silver. So China has been a silver standard for thousands of years. Okay, before they have a gold as well. They have a gold and silver ratio 1 to 10 actually. But mysteriously, somehow, if you look at Chinese history, 2,000 years ago, China certainly lost a lot of gold. So they cannot use gold to become a gold standard anymore. So they continue for silver standard for the past, most of the time for the past 2,000 years. So the rumor was, there are all these speculation, one that maybe with the emperor get all the gold and then put in his tomb or something, but maybe we'll dig some one day we'll find a lot of gold, but we do not know. So basically that's why silver become the equivalent of money in China for thousands of years.
Fascinating. Okay, now I've heard you talk a little bit about China's intention to influence inflation, price inflation specifically, in the assets they can manipulate. And we're talking about steel being, a commodity that the United States needs a lot of. Can you elaborate on this concept for me a little bit? Does that make sense to you, what I just said?
Yeah, exactly. I wish I have some slide in my recent presentation on that. So what you see is the steel price going like this way, going up, up, up. Okay. Yeah. The iron ore price crashed. Iron ore actually dropped below $100. I have people, steel analysts calling me, they're talking, they have never seen this in the past decades. So usually steel price goes up, other input of steel price also go up, but you don't see the iron ore price drop. What happened? Because China cut the steel production to almost 30%. China is the largest steel manufacturer in the world. So China cut almost 30% means worldwide capacity, steel capacity dropped by almost 20%. So that's lead to a shortage of steel. Steel price going parabolic, but iron ore actually dropped. So that's, they in China, they have a, they said they put a name of the carbon reduction of carbon footprint. It's a very elegant way to put that away.
That was the stated intention of dropping steel production to 30% was we're doing this to adhere to climate goals. That's correct?
Well, their excuse, right? 25 to 30%. Right. So that's, but on the other hand, all the steel makers in China, 1 year, they make 10 years of profit. That's the same thing happening in aluminum. There's another metal called magnesium. Magnesium actually went through the roof. There's a shortage of magnesium because it's 90% produced in China. China just cut output. Too bad. Okay, so the price is price is going at least 5 or 6 fold in the past few months. So my thesis is that China is start to engineering inflationary policy. Okay, so because they think they can use this to take. China still has a very dominant force in the war. They use that. I take that opportunity to maximize the profit. Before, China has been maximizing the market share, but since the trade war, so from Chinese leader perspective, I told my friend, you have to think about Xi, what he's thinking. So from their perspective, United States want to kick China out of the market anyway. So why don't we just take advantage of that? We maximize our profit. So you can see the dramatic increase of steel price, magnesium, anything China produces, including zinc. Zinc and China's top producer. China also top producer of silver. Okay, and also a big producer of gold. So anything China produces will get more expensive. So that's the thing.
Interesting. Okay, now, so this is a trend, and therefore you would see accelerating moving into 2022, being bolstered profits for Chinese manufacturers of these same goods we just talked about, commodities like magnesium, aluminum, steel, and gold and silver for that matter. I mean, one of the top gold producers, top 3 silver producers in the world. Is that right?
Yes. Mm-hmm.
Okay.
Yes, exactly. Maybe less impact to gold and silver, but for those China dominate, magnesium, steel, aluminum in a sense, it's very, very sensitive. But I think for gold and silver, there's, wind on the back, right? So it's more easier to go up than down.
So talk to me about that. Talking about that tailwind that you're seeing right now, because I could say that we've seen the macro forces been supportive of a gold price for 18 months, yet it's been a pretty flat market, right? And that's starting to shift. Like since it seems like October's inflation numbers came out, that seemed to me like maybe a bit of a trigger point, and now things are moving. But what are you seeing?
Yeah, exactly. We have seen continuous ETF selling in the past few months. I mean, but it slowly trickle down. and central bank has been picking up more and more gold. So, but for investor sentiment shift, as you've seen dramatically in the past few weeks. So people were, as we discussed, all these funds, they were waiting for the tapering event to not go down to 1,500. They couldn't. So some has to cover, some may not have not covered yet, but investors are rushing in because inflation, right? One of the key reasons people see inflation, and then the Fed is somehow in the box. You think about that, how high is the Fed has to raise interest rate to slow down the inflation. Even the raise by a few percentage, there's is very little they can do because a lot of inflation comes from China. What can they do, right? So it seems like the Fed is in the box, and then the inflation going to getting worse, and we have a very nice rally of gold and silver. Even dollar has been breaking out. If you notice, dollar is breaking out, but gold and silver are actually stronger. Very, very impressive.
So if you were to speculate what China will do with this surplus of cash, so the strategy works, Chinese commodity manufacturers, of a few anyways, are going to generate an outsized amount of cash this year and next. Will this follow the traditional route into U.S. treasuries? Do you think it will go a different direction? Yeah. What's going to occur with the money?
Yeah, that's a very good question. I don't think they will go back to the U.S. Treasury anymore. It could be other ways. They may buy the goods China need. I think if copper, Chinese government have been selling copper this year. They sold a lot of inventory. They try to cool down the copper price. If there's any drop in copper price, they will be busy buying re-inventory, right? So because they have so much surplus cash. And also, very interestingly, is the gold reserve. China's gold reserve is quite low, so they could be buying gold secretly. Very hard. I saw some blog, say China buying gold, but there is nothing substantial. I haven't seen any substantial. But I think if they buy gold, they will be very secretive. You don't know until the after fact. And then one day you wake up, gold up a few $100 because of China just say, "Oh, we double a gold reserve."
Right. Okay. So back to your portfolio then. Based on what you've shared, you're switching your focus back to precious metals equities, gold and silver equities. Talk to me about the hierarchy. Like, at what point in the food chain do you invest? Do you strictly look at producers, Chen? Do you look at early stage explorers, development, everything in the middle? What's your preference?
Oh, actually, I like all of those. I started with juniors. 20 years ago, and I gradually expand my portfolio. So I have a root in junior, and I also like producer, also have ETF and future market as well for the leverage. But the future have to be very careful. Not many people can trade future successfully because it's very leverage. If you got it wrong, you got killed. So that's something you be very careful. And also very heavy in the ETF. I have GDX, silver miner junior. Those kind of gold miners and gold miner junior, silver mine. I like silver mining juniors. Yeah.
Okay.
Still BJ.
So for anybody who's sort of newer, or whether or not they're newer, who cares? They're seeing the market begin to take off again. They're back in hunting mode. It hasn't been very exciting for the last 9-12 months. Now, suddenly it's caught their attention and they're experiencing some excitement. They want to get into some deals in the precious metal sector. Talk to me about some rules that you have, Chen, because the biggest challenge I see investors face, whether they know it or not, is they look at way too much stuff. Right? They're hit with way too many opportunities, way too many distractions. And there's often, and I used to suffer from this, maybe I still do, I don't know, don't have enough rules to get to an easy no, right? So you put 100 opportunities in front of me. The first thing I want to do is get rid of 85 of them right away, right? How can I just dismiss the 85 that aren't worth my time with some simple, easy to follow and consistent rules? And then I can do deeper diligence on a fewer number of companies and actually discover where my money is best placed. Do you have a formula? How do you go about deciding what's worth your time and what isn't?
Right. Well, I would say if people don't have too much experience, just go for the ETF, right? But the GLD and SLV, the leverage is not high. So when the bull market, you want to have some leverage, you go to the miners. So I have a GDX, GDXJ, and then silver SILJ, silver junior, miner junior. So those are, I think, a very good vehicle if you just very new to this sector. And also gold and silver have very clear seasonal pattern, as we discussed. Used to be from Indian holiday all the way to Chinese New Year, but India has a pandemic right now, so may not be very effective. But from now on, usually from November to the Chinese New Year, that's the end of January, early February, it's a good season for gold and silver. We have a very good shot to go much higher and squeeze the shorts.
Now, are you comfortable sharing any of your favorite, now we're looking just at the equities, not ETFs, but specific companies. Chen, any favorites that you'd be comfortable sharing with my audience?
Yeah, I mean, if you want the liquid big miners, I think gold miners, I like Kinross the most. The reason is it's been very high. They have a very high cash flow, positive cash flow, buying back shares. They had an accident in their major mill, right? The mill was shut down. So a lot of people analysts downgrade their the stock. But the mill is covered by insurance, not covered by the damage of the mill, also loss of the business. So which means they will get paid even though they're not taking gold. Actually, gold is there. So you can see actually it's a gain for the company, right? But anyway, the stock was whacked because of that. But the mill should come up in a month or two. There could be upgrades. And then if you compare free cash flow, all the other parameters, Kinross seems to be very cheap for gold. Silver, I like Max Silver. Max Silver just released the earning. They have a 40 million line of credit, which means they don't need to raise any money. They will get the production will come online in Q4 throughout next year. A very, very high margin business. Silver costs only a few dollars. Very, very close to Wheaton precious metal if you compare with. So people say Max Silver is expensive, but if you look at Wheaton, it's more, and the margin is so high compared with all the other silver miners. So it seems they have a run, and then now people. It's consolidating right now. I would watch it closely if it breaks out again. So those are the liquid. I also have a lot of juniors. I don't know whether this is a good place or not because juniors has a lot of risk.
This is a great place for that, Chen. Yeah.
Okay.
Let me hear about some of your favorites.
I have to think about those. I visited. For example, I just came from Peru and Mexico, and I visited quite a few projects. Okay, one company, the Silver X, actually is very interesting. They 40 million market cap, 11 million cash, and they're ramping up. There should free cash flow in next month or two. I mean, just maybe a quarter, just to be on the size. And so it seems to, if you can tolerate Peruvian political risk, okay, that's it. That seems good. And also with another project, other companies, Guanajuato Silver and Atlee, both in Mexico, they both actually very, very good.
What were those two names? Sorry, Chen?
Guanajuato Silver. It's the new silver play. They have a district scale. And then Atlee also is a cash flow story, but they may, the bank just pulled went under to pull the line of credit. The stock actually cut almost in half. So maybe that may be a good opportunity for those bargain hunting, especially we have a tax loss selling season right now. In the United States, usually it's from Thanksgiving to the Christmas. I don't know Canada, but they're about the same. So in the next month or two, there could be opportunities because some people just want to sell it for the tax credit.
Yeah. Okay. All right. I like those names. Been a shareholder of SilverX since they went public, more or less. Big fan of the management team over there. Now, Chen, do you look at cryptocurrencies at all? You invested in Bitcoin?
Unfortunately, I don't. I'm a more traditional guy.
Right,
I don't follow crypto, so I really don't know. I cannot comment on that. Sorry.
Yeah, no, that's That's totally fair. When it comes to the base metals then, if I were to ask you to pick one base metal, Chen, that you were most excited about for 2022, what metal strikes you?
Oh, for most excited about, I see, I see zinc has a good support because of China's domination of China. The copper, they may have some little bit surplus next year, but again, if there's any pullback, the Chinese government is ready to restock. So I think, base metal, you go with copper and zinc producers seems to be pretty good. I would be careful about lead. Yeah, lead can, because lead-based battery, it could be on the way to become distinct. The reason is right now China start to replace, they use a sodium battery coming up. They replace sodium with lithium with sodium to make a sodium battery. Right? Sodium battery is actually very safe, very good at cold temperature, and but the capacity about 80% of lithium. So, but still, sodium dirt cheap. Sodium is in table salt, right, everywhere. So they can make it very cheap and then potentially replace the lead. I think that's an easy one. They probably need some more technical tweak to replace lithium. Not there yet.
Right. Okay. All right. Look, Chen, it's great having you on. It's about time that we did this. Been aware of your letter and whatnot for a while. So chenpicks.com, right? That's where people can find you?
Yes.
Chenpicks.com.
Thank you.
Right.
Yeah, nice to be here, Chen.
Yeah, my pleasure. Let's do it again. All right.
Okay, great. Thank you.
Okay, guys, 3 last things. First, if you enjoy my interviews and would like a bit more, you can subscribe to my Friday newsletter. It's free, and the comment to subscribe is right beneath this video in that pinned comment. In this newsletter, I share my key lessons learned, takeaways, and any actions that I might be taking in the market as a consequence of what I've learned on the show. Second, when I started a YouTube channel, I never anticipated generating any advertising revenue. But coincidentally, I do now, which is awesome. And so what I've decided to do is donate this to an organization that is very close to my heart called Zero Ceiling. Their mission is to end youth homelessness. The way they do this is by providing young people experiencing homelessness with supportive housing, employment, professional support, life skills, and outdoor adventure. Because often young people in urban centers with no resources will never get the opportunity to experience wild places, nature that can be so transformational, and absolutely was for me. Third, if you prefer to listen to my content, you can now find us wherever you listen to podcasts. Just search for The Jay Martin Show.